Hey y'all, and welcome to my private casino. We are here because I'm going to show you today how you can be the house when selling options. I'm going to show you a great strategy, how to really increase your win rate so you're not getting assigned all the time. As usual, none of this is financial advice. I'm not a financial advisor.
Knowledge.
Now in this example, I'm going to be specifically looking at selling puts. Why puts? Because as you know, you sell a put, and then if the price stays above the put, you don't get assigned and you get to collect all the money. And this is really good because if we look at the market, as I got on screen, we have XPX, the S&P 500, and you can see over time, the index naturally goes up, right? This is what it's been doing since the beginning of time, up, down, up, down, up, down. But in general, it trends up over time. So if we're selling puts on stocks or ETFs that go up over time, we're already at a high win rate because it goes up over time. So there's a higher chance of it going up than down. We're already putting ourselves in a better position on stocks that generally trend up over time. We're not selling this on crappy stocks that are just going to drop and lose all of its value. We want to sell things that are going to trend up over time, and then this will already increase our win rate. So one is we can just use the market's natural inclination to trend upwards if you're doing like SPY or a stock that trends upwards. If you're naturally trying to buy puts during this time period, sure, you'd have some big wins like 2001, you'd have 2007, COVID if you could have timed that. But overall, you would have really been losing instead if you were just selling puts this whole time, and then if you got assigned and just keeping that till the price rebounded back, right? You'd have a much better chance over the past, to 1927, selling puts on this long time horizon. So use that to your advantage. So I outlined a couple things for you. How do we use this inherent advantage to increase our win rate? Number one, as I said, select a stock in an uptrend, ETF, whatever. Over time, that generally trends upwards. Two is avoid earning plays as they're unpredictable. You don't know where the stock's going to go. It could be a great earnings play and can still drop. I just avoid these plays when selling options because it is inherently, you don't know what's going to happen. So you don't know the probability of that happening. And then to really increase our win rate is we want to utilize a good indicator like MACD, RSI, or Bollinger Bands, whatever, I don't care. And then sell a put when you expect the stock to go back up utilizing that indicator. We don't need to overcomplicate our charts. We just need something simple, and we can do good with these simple indicators. And number four, a bonus one, sell your put below a strong support zone. And I identified a couple of these so you guys can see, and we can go through a couple examples, and this will really increase your win rate on companies you want to own anyways, but you can increase your selling puts so you can keep that money, keep that cash, and just keep doing this over and over again. So let's go over the first example. On screen, I have Exxon Mobil. I have a 200-day simple moving average and MACD on the bottom. Now, we can see a couple things. One, it's above the 200-day moving average. It's been in a solid uptrend. Since early 2022, this has been going upwards. Two, the MACD is about to cross upwards. That means it's going to have some bullish momentum. Hopefully, it seems reliable. As you can see, this went up, then down, and it's been chopping, and then it went up and down. So this seems like a solid indicator for this stock. Three, we can identify a very nice support zone as we can outline right here. This is going to be perfect. Just a general trend, right? You could also draw one right here if you really wanted to. I'd say this would be the less conservative estimate and this would be the more conservative. So we have one at about 105 and 101. So let's see what we can get if we were to sell a monthly, and let's pretend the MACD just crossed upward. So that means getting bullish momentum, and it looks like it is just about to cross. We'll see by the end of the day. So I have ExxonMobil on screen, and let's sell a put. I'm just going to do a monthly. You can do what you want. Weekly, monthly, I don't care. So hopefully this is going to send bullish momentum, but if not, and it keeps sinking, we have a couple layers. 200-day moving average. We have one support zone and two support zone. So let's see the first support zone at 105. If we were to sell a put at 105, we would collect $1.09, which is $109. So that's almost 1% on the month, and we would have a really good win rate because we have the 200-day moving average, bullish momentum, and we have a support zone. But if that's still too conservative, you do have a high chance of getting assigned. You can see it's 82% chance of expiring worthless, but maybe that's not good enough for you. So let's say you want to be more conservative and go down to this 101. So that'd be $100. You could still collect $46 for the $100 strike price, and that'd be 0.5% on the month, which really isn't that bad. So I'd say when this MACD crosses upwards, this would be a really good play and you'd have a very high chance, you'd have a very high win rate of not getting assigned. So let's look at another potential example. Not perfect, but the potential scenario. So you can see in general, the stock trends up over time. It's kind of been sideways for now, but you can see it's above the 200-day moving average. We have some support zones. We can draw them over here. You can see that one. And I'd say this one is a weak one right here. You can see it touched down a couple times. See some candles just blew right through it. I'll say this bottom one would be a more logical one, and this one right here. But it's above the 200-day moving average. MACD crossed upwards, is going to come back down, so maybe the next cross up to see if the momentum is confirmed. But let's see what we could get with a couple support zones and above the 200-day moving average. What could we get on a monthly for Costco? So I wouldn't play this one personally for myself. You can see it's just pretty weak. So let's say we can check the 535 or about the 520. These might be good support zones with a low likelihood of going down. Again, if I was to actually play this, I'd wait till MACD crosses down. Again, the crosses back up before I'd actually play this, but just for example's sake. So we want 535 and 520. If we were to sell at 535, we'd collect $403 with putting up $53,500. So that's a lot of money, but you're close to making a percent on this. What would that be? 408 divided by 535.00. So you'd make a 0.76% on the month, which is pretty solid. If you did that every month, you'd be at a 9% gain on the year with simple selling puts as strong support zones. So the 535 is pretty solid. You're above the 200-day moving average. There's a support zone, and hopefully there'd be bullish momentum again. If we were to do the 520, you'd have a very high chance of being profitable 88%, and you collect $248, putting up $52,000. So it's in an uptrend. We want to confirm with our indicator, and we want some support zones, which this one would meet if the indicator crossed upwards just about. Let's look at one more example for you guys. Now again, this one isn't perfect. As you can see, the MACD is kind of weak, which is fine. It's above the 200-day moving average, but we do have a couple support zones we can identify. See this one right here. There we go. As you can see, the wick went through, then it came back up, and we can also identify one right here. As you can see, this top down, and then it turned into support right here. So we have two support zones. We have 154 and we have about 146. MACD did cross up, looks weak, but just for example's sake, let's check it out. Let's first check out what we'd get for a 154 put. So let's go to Walmart. As usual, I'm going to do the monthly. So they don't have a 154, but they do have a 155. And when this would actually be pretty aggressive because you'd collect over percent on the month. You get $1.93, which is $193 for putting up $15,500. So that'd be a 1.23% gain on the month, which is pretty solid. But that seems kind of aggressive. That's a 76% chance it expires worthless, but that's not good enough for this video. So let's go down to the next one. Let's look at 145. How much would you make on this? You have $58 for putting up $14,500. So this would be a little less than a 0.5% gain on the month. Again, not terrible, not great, but this is a conservative strategy. You'd have a support zone and a support zone for Walmart, plus the 200-day moving average, which you can see it has respected twice. So there's a good chance it respected a third time. You never know. This is trading, as in the casino. That's the point of the house edge, is because over time, you will make your money back, even if there are some drawdowns sometimes. But over time, given long enough with the house edge, you will accumulate that money. Also, just keep in mind when you're being more conservative, the payout is going to be less. That's just a natural part of the process. Now, I want to show you guys some examples where this really did not work out well if you didn't follow the rules. So I have Coca-Cola on screen. If you know, it's been in a severe downtrend recently. Now, it is in an uptrend over time, as it does have periods of decline. But as you can tell, let's say you were like, okay, price is close to the 200 moving average, MACD crossed up, and it does have some support right here. So you can see it absolutely blew past that. But what you need to notice is price was below where the MACD crossed upwards. It crossed up, but price was below still the 200-day moving average. So it's not really in an uptrend. You want to have the price above the 200-day moving average when you're selling the puts. You want it to be bouncing off the 200-day moving average, kind of like here, bounce, bounce, bounce. That time didn't bounce. That would have been the time it failed, but it was still in an overall uptrend. Like this is a downtrend according to the 200-day moving average, sideways market. Not the best to gain momentum. So this is a time it would fail. You can also look at Pfizer, right? Strong downtrend way below the 200-day moving average. But if you're like, oh, look, the MACD crossed up, then you sell a put right here, it's just going to get blown out. You're like, oh, it crossed up, it's going to get blown out. It's still in a downtrend. This is not the time. You want stocks in an uptrend if you're selling puts. Sure, over the long term, this has been going up, right? That's good. But it is in a major decline right now. So use the 200-day moving average. Which way is it pointing it? Sideways? That means neutral. Is it pointing up? That means bullish. Is it pointing down? That means downtrend. Very simple. Don't overcomplicate the 200-day moving average. Just keep this in mind when selling it. You can't only rely on one thing, but use your intelligence. Use the 200-day moving average. Use something like MACD, like I do, RSI, Bollinger Bands, whatever, and just try to find it when it's in an uptrend and then it's kind of mean reverted back down. Then sell your put when it's gaining momentum. These are just general examples, but I hope you get the idea. Now, the nice thing with selling puts is you don't need to be right about where the price will go. You just need to be right about what it won't be when it expires. So if you sold a put for Walmart at $145, you have a large margin of error. It could go up, it could go down $15, and you'd still make money, right? So you just want to be right about where it won't go, where the stock price, how far down it won't go, which you might be able to get a good advantage doing small technical analysis, seeing if it's in an uptrend. That's really the simple idea. You just want to be right about where the price won't be below. I hope this helped you guys. Definitely learn to be the casino. Don't be the gambler, because the gambler loses over time while the casino continually makes money. If you are wheeling and need a spreadsheet to keep track of your trades, check out my free spreadsheet right here that you could download. Peace.